Hi, everybody. This is Alana Hallaert with Dundee Bank. And we wanted to take a little bit of your time and kind of go over some things so that you could be prepared when we do our mentoring agents meetings. This information is meant to be used by folks entering in brand new. And it's also could be used for people that are looking for a quick cheat sheet, reference guide, or even as a refresher course. So feel free to use this material however suits you best. And always feel free to reach out to myself or my partner, Nikki, so that we can help you decipher, run through, answer questions, and just simply make sure that you have the most recent information. Our industry in the banking world changes often. And in light of the last, call it 18 months with the pandemic, the investors have changed their criteria in some cases almost daily. So please be sure to ask either us or perhaps your other lender partners for the most recent information so that you can be aware of it, because it can have a tremendous effect on the power of your buyers to buy. So that all being said, wanted to just go over a few things. We have sent these things to both Tim and Carol so that they have them to put into your research resource toolbox so that you can use them at your discretion. The first thing is, this is a packet of information. It's a very, very nice reference guide. We have this as PDFs. All of our information is PDFs so that you can look at it and see it. This is just really a basic guide of just basic information. You know, the 1, 2, 3s, the ABCs, if you will, of our world, so that you kind of have just enough to get started on, and it can help you ask questions of your customers. We have even a skinnier cheat sheet for you to use that you can put on your laptop or, you know, print off and use. It helps you with mortgage insurance rates. It helps you with how much seller assistance, although we don't have a lot of it right now, but it helps you with that. Tells you loan limits, things of that nature. These things also have cost sheets based on our fees that we charge here at the bank. So these have conventional, they have USDA, they have FHA, they have VA. We do have jumbo loans. NIFA is a blanket program that can partner with all of these except the jumbo. So questions on that, we can certainly entertain and help you with that. Other things that we've given as resource guides is we have a sheet that kind of tells you the do's and don'ts of what a buyer borrower should be doing. These have saved our bacon a lot of times because folks understand, don't change jobs, don't buy cars, don't buy furniture, things like that. So this can be very helpful to give to customers so that they're aware of, again, do's and don'ts. Don't do these things and do some of these things to help yourself. 10 deadly mistakes. We swiped and adapted this information so that we could give it to you folks. Helps to give buyers and borrowers understanding of why it's important to use a real estate agent such as yourself. Pre-approval sheets. This kind of gives you what we're looking for in terms of documentation so that we can get them a pre-approval. So this can be kind of a quick down and dirty to be used. And then this is kind of a sidebar, but a lot of people ask me about it, and mortgage insurance is ever evolving with those companies that offer it. So this is just kind of a quick guide on MI and how it can be looked at and determined. Most of the time, it's better to ask your lending partner to figure the MI, because each person is very unique with their credit scores, their debt to income ratios, their buying power, things like that. So all that being said, these again are all things that we have shared with Tim and with Carol so that you can have them at your fingertips. If for any reason you struggle to get them because they're busy and not available and there isn't an easy access to them, just ask us. We have them and we can send them to you. So real quick, since this is kind of a quick tutorial, I'm going to use this as a guide to kind of get through some things. For those of you that are new to the business, some of the mainstays of what we need to make sure you're aware of is the types of financing. The flavors are conventional, FHA, VA, and in some cases USDA. USDA is very unique because it's based on the address of the property in small towns with certain populations. So you would want to always check that address through the USDA website and make sure that it's even acceptable to them for financing. They have a really great website, which is in this information that we've given, that you can go to, plug in the address, tells you right away, yes or no. For example, Louisville, Weeping Water, places like that are available through USDA. And in some cases, USDA is a good program to use, not in all. So we want to make sure that we investigate and make sure we've looked at all the alternatives for our customers, because giving them the best buying power and structure is the most important. So FHA, that's very popular. Conventional VA, all of these programs are the mainstays of what we work with within our world. And in some cases, a partner with that can be the NIFA program. NIFA is the Nebraska Investment Finance Authority. Dundee Bank is partnered with them, so we do offer them. In some cases, we can get discounted interest rates. And in other cases, we can get home buyer assistance loans to help with down payments and things like that. They don't always make the best sense. We want to make sure that we've taken care of all of the guidelines and parameters that are required through their programs and make sure it's a good fit. So we look at all of that to see if it is the right fit for our customers. And in many cases it can be, especially if we're limited on cash and things like that. But in some cases we find that we have better programs with just traditional type financing. So those are the things that we feel we have some expertise in. We feel that we have some very good experience. Nikki and I have been in this business for well over 20 to 25 years. So we've kind of seen some of the movement through things. Now, I will say that during the pandemic, we saw things that have been unprecedented. Requirements that tightened up because investors were concerned with, economics. So some of these things are just life events that change the dynamics of our lending patterns. So please be aware that as those things start to hopefully loosen and get back to what we would call more of a normal atmosphere, we're going to see some of that lending come back online that isn't quite so tight. So make sure you stay in touch again with your lending partners, because that's going to be very, very important. So going back to our little packet, the 3 types of financing, 4 types are in here. I have included just a grid that kind of runs down the very bullet points and basics of each one of these types of programs, the pros and the cons, what's required for down payments, what we're seeing for things that can be, again, pluses and minuses for each program. One of the things that's going to be stand out on this paperwork is that there's cost sheets, and those can be used as a guide. They are not exact for each person, but they are going to be something that you can use as perhaps a way to run through if you don't have access to somebody that can run a cost sheet for you right away, these can be used as a guide for you to do them. But if you have access to your lender, if you have a partner that is available to do that, sometimes they can make them even a little more exact based on the person that's applying. But these are going to be estimates that you can use. I've used basic rates. They are for conventional. They have a couple of different options. I did 20% down. You know, that's the golden rule that everybody loves, but hardly anybody can obtain. 10% down, 5% down, just to kind of show you some different types of options there. And then FHA is very basic. It is what it is. One of the things to keep in mind is, even though it's a 3.5% down loan, the mortgage insurance is something that's a little different than what you're going to see in the conventional world. FHA's mortgage insurance is life of loan at this time, so it's on there forever. It never goes away. And it can be a little bit more pricey depending upon the customer. VA, something to remember with VA, very critical for our active and exited service members. They have different types of funding fees. For conventional and FHA, we have what's called mortgage insurance. Conventional is privatized, FHA, government mandated. VA doesn't have mortgage insurance. They have what's called a funding fee. This is their type of mortgage insurance. And it's not paid monthly. It's paid through rolling it into the loan in a one-time cost. Each military member has a different type of funding fee. They could have what they call first-time use, meaning exactly that. They've used it for the first time. They have subsequent use, same thing, means they've used it before and they're going to be charged a different rate using it again. And then in some cases, if they put down payments down, they can get reduced funding fees. Now, the one time that we don't have to worry about a funding fee is if they are funding fee exempt. And in those cases, they have to be 10% or more disabled in order to receive that. So those are things that we check out. Those are things that we make sure that we are aware of, and we get what's called a certificate of eligibility. I know that's throwing a lot of terms at you that we use, but that certificate of eligibility tells us a ton about a veteran or active military person. It tells us what kind of funding fee to charge. It tells us if they have any disability that they're getting that we can use as income. It tells us if they've got outstanding eligibility use. Some history on VA is that there's, I don't want to call it a rumor, but the misinformation that goes around is that you can only use VA on one home at a time. And that is not necessarily the case. It depends upon how much eligibility we have. And there is a special set of equations and calculations that we have to do as a lender to determine if we could carry eligibility or a VA loan on more than one home. And that is what we do. So there's no way for you to determine that without having a lending partner help you calculate it, because in some cases you can carry it with no problem. In some cases, you have to come up with a down payment on the new one or get it released on the old one. And that can get kind of tricky. So don't assume that they can't or they can. We need to make sure that we're aware of, what those numbers are so that you can track them properly. So that kind of gives you some real fast rundown on these. There is so much that goes into each one of these. It would be difficult to try to cram it all into kind of a 30-minute deal. But prior to the pandemic, we used to do kind of monthly classes to help understand a lot of these things, go over cost sheets. If that's something you feel would be beneficial and would help you, please reach out to Nick and myself. We would be happy to meet one-on-one, or if a little group of you want to get together and we want to talk through all the different kinds of variables that go into these things, we're happy to do that. Not everyone wants to do that. They want to leave that up to us. But sometimes, you know, as you've heard, knowledge is power. So it gives you a lot of, you know, information that you can feed back to a customer and gain their trust and their respect because you are, you know, a trusted advisor. So that is in these packets. Those cost sheets, super helpful. You need help deciphering them, just ask. We do them all day long, so no problem. I did put in a little bit of information on ARMs. ARMs tend to surface, they're adjustable rate mortgages that tend to surface when our fixed rates get higher. We're nowhere near that, but I do have people that ask about them, so I put a little bit of information in here. We usually see those ARMs when we start to get into the 6, 7, 8% fixed rate programs. I've seen those for many, many years, but it doesn't say that it can't come back. So anyway, that information's in there. I don't think anybody's really going to be using it too much unless they have somebody that's very transient and just wants like a year loan or a 3-year loan. Then we've got some information in here on all the conforming loan limits. They all are different. They change. I have not heard if 2022 has any mandated changes coming, but of course, if we hear that, we would let everyone know. It gives you a rundown on some of the things like what's an LE, what's a CD, what those documents provide and how they're provided and the timeline in which they have to be provided to be in compliance, and what preliminary numbers are versus final numbers. For people that have been doing this for a while, those things kind of have become old hat. But for people that are just entering into, you know, this industry, those kinds of pieces of information can be helpful if you can have them at your fingertips. I've also put in here information about what's a bridge loan, what's a HELOC. A HELOC is a home equity line of credit. They can be very similar, but they are different. So I've got some information here on that. Bridge loans have become popular right now so that we have what's called non-contingent contracts. If any of you have been researching how to get your contracts accepted or your offers accepted and ones that are being accepted, you may find that eliminating contingencies on the sale of an existing home is almost a given right now. We do have them approved without, without having had them sold, but more often than not, we need to find a way around it and get creative. So that's where the bridge loans come into place. Happy to go over those things. Our bank does them. We do the HELOCs as well. So we have some avenues there that not all lending institutions have access to, but and we even have those places reach out to us to help. So we're here to be good stewards of everything that we do. Don't feel because you have a lending partner that you can't ask us questions. That is our commitment to our brokerage here, to be at your service whenever you need us to be. Additional information that I've got in this packet is waiting periods for the different types of programs on, you know, if we've got someone that has suffered a foreclosure, maybe they've suffered a bankruptcy, maybe they have both, maybe they have deeds in lieu. There's life events that cause challenges, and sometimes we can overcome them. Sometimes we simply have to wait out the timeline to get past that speed bump. But this is good timeline information to know if those words come up in a conversation, they should trigger a red flag, and then you need to kind of know what your timeline is. At that point, get them in touch with the lender so that we can investigate and see. Because just because someone thinks they filed perhaps bankruptcy in May of 2019, if it wasn't of record until June of 2019, that's the date, not May. And so those can make big differences when we're talking about a 2-year time frame, a 3-year time frame, a 7-year time frame. So we need to know, and we can help find that out for you so that you're not caught in a situation where you have to delay a closing because you wrote a contract too early to close too early before that timeline has expired. So I did that for all of the different programs so that you could check on them. There is also kind of a sheet that gives you bullet points and steps on what your buyer should know. For example, they need to be pre-qualified. They need to get their documents together. Maybe they have income challenges or employment challenges or credit challenges. We do a lot of counseling to get people ready to go. Not everyone comes out of the gate ready, and we feel that taking the extra time to guide them, help them with corrective actions if need be, or timelines that need to be put in place, bodes well for them to become our future customers. We have many, many people that we school on how to do that so that whatever timeline it takes to get it done, they become our customers in the future. We don't want to lose them. So something to kind of keep in mind. Sometimes we need to wear multiple hats, as agents, as lenders, as counselors, as financial advisors, financial planners, just, an all around means of helping those folks get to the finish line, which is to be that homeowner. Because then in the end, hopefully they refer us to others that we can help along the way. And in the very, very back of that packet, there is information on how to reach out to Nikki and myself. We also have all of the website information so that you can find the different programs and things like that. And we hope that we have given you some resource tools that can help you to do different things. We know that it is a very, very complicated and very hard industry to be in right now, especially with the lack of inventory, the aggression to get your offer taken and accepted over others. And we want to make sure that we arm you with everything that we can so that you can turn around and shine when you put your offer in for our mutual customers together, because that is how we make our living and we support our own families. So always know we are trying very hard to give you anything we can so that you and your buyer can surface as the contract that's accepted. And then we're going to do everything to get to the end. We try to make all of our closing dates. We try to be good stewards of making sure that everything that needs to be dealt with, we do up front. We get those appraisals handled. There's always going to be a challenge here or there, but we have a lot of resources at our disposal, a lot of years of experience of trying to maneuver around certain challenges that may surface. So we feel like we've got a pretty good handle on being able to help our customers. So with, again, all of that being said, a lot of information in a short period of time, we hope that the information we put together that we've given to Tim and Carol to be accessible to you allows you some leg time to go through it, read it, write notes, write thoughts, write anything out that you might want to talk about, and then we can do our, kind of quarterly, semi-quarterly, whatever that is, do that meeting. And then if we need to address something before or after it, we can do that too. So again, my name is Alana. I'm with Dundee Bank, and my partner Nikki is also my right-hand man, and we're here to help you with everything. My cell phone you can use to text or call me at any time, 402-618-6454. And we are here again to help you kind of swim through all this information and make sure that we have everything to you that you need. I hope you found that this was helpful. Please let us know if there's anything else you'd like to know, or any special classes you'd like us to go over. Again, cost sheets, mortgage insurance, just programming, NIFA, things like that. We'd be happy to help you do that. And I hope you all have a great day.